Yo guys, welcome back to SS Forex Academy. Hope everybody's been well. So just an update on the course. The course is now live and yeah, it's up and running. So the last 2 days for you guys to purchase the course using the discount code below, launch 50. I'll pop that down in the description box below so you guys can check that out. The website is www.ssforexacademy.com, and yeah, this is what you will get inside the course. So just quickly, this is what the course looks like. On the inside, we've got technical analysis, I've got all these videos, PDFs, etc., market structure, smart money concepts, indices and fundamentals, as well as the strategies. And we've got the recorded sessions as well. So yeah, 31st of January, the course will end. So it will then, normal pricing will then resume. So as of 31st January, we will move the pricing to $250 instead of $250. So yeah, grab it while you guys can. Okay, while we're here, just a reminder, my Instagram is Shakil_SS Forex. And yeah, I've been getting quite a few requests to do this video. Obviously, you can see by the title, it's confirmation versus aggressive entry. So let's jump straight into it. Just share my screen again. Okay. All right. So basically, what is aggressive and confirmation entries? So an aggressive entry, quite simply, is when you have identified your point of interest or higher time frame zone. This can be the H4 daily, and so H4, H1, and daily time frame. Could even be a weekly time frame, but that's generally the time frames you look at to identify your higher time frame zones. So within these zones obviously need to form within your premium or discounted areas, and then you enter basically of buy limits or sell limits that you place on MT4. So the pros of these, so basically before we get to the pros, as you can see, you've identified, if you look at this picture on the right, you've identified your higher time frame zone or point of interest. So that's a supply zone that we identified, and then you basically just wait for price to retrace and come back to that zone, and then you set your sell limit according to that zone. So immediately once price touches the zone, your trade is now active and you wait for it to hit TP. So let's go over the pros and cons of basically using this type of entry, this aggressive entry. So the pros, yeah, you set your trade and you forget about it. So basically you set your buy limit or you set your sell limit and you forget about it, and it requires much less time on the charts, right? Your cons, so your cons are, it's a low risk to reward trade. This is because generally on your higher time frames, your stop losses are a lot bigger, especially when it comes to supply and demand zones. If you're looking at an H4 supply zone or a H1 supply zone or demand zone, the stop loss you'll find it tends to be much bigger than the one that you would have identified on an M5 or an M15, for example. So hence why your risk to reward isn't that great. And then another con would be your, okay, so additional risk, as you will not take into account the momentum or volume at which price approaches the zone. So what we mean by that is, if you set a sell limit or buy limit based off a supply zone or demand zone that you see on the higher time frame, once price reverses and starts retracing back to your entry, so to activate you, the momentum in which it approaches that area is very important. And if you're setting a buy limit or sell limit and you're forgetting about it and you're going to come back later and check on it, you might find that sometimes, it could activate you and smash your stop loss. And obviously that is because you did not take into account the momentum or volume which price approached your zone. So yeah, it's not always the best entry to take, and obviously that's why you've got a confirmation entry. So what is a confirmation entry? A confirmation entry is when you have identified your higher time frame point of interest or zone and then wait patiently for price to tap into the zone and give you the desired reaction. So after the reaction, you then wait for price to show you intent in continuing into the desired direction. Here you are typically waiting for a change in character or a break of structure. So as you can see on the example on the right here, you've got this base drop, right? And then you've got from here, you've identified your supply zone in the market and you waited for price to approach your supply zone. You did not set an immediate sell limit at that level because you needed more confirmation before taking that setup. So once price taps into the supply zone, you see it gives us these series of higher highs and higher lows, right? So once it taps into the supply zone, it gives you another higher high, taps again into the supply zone, gives you a high. So that higher high now drops off and then takes out the previous low in the market. So the previous low in the market was taken out. Now it shows you price's intention of changing direction. So from this momentum that's been built up to the upside, it's now changed momentum to the downside. So there's a shift in momentum that happens, and you can see now after the change in character, we've formed new supply, and that's a supply within the previous supply, and then that becomes the new entry or the confirmed entry into the trade. So the pros of trading like this would be the following. So number one, we've got high risk to reward trades. So number two, we've got extra confirmation. This means a much higher probability setup. So aside from the high risk to reward trades, you'll find that, okay, so on the high risk to reward trades, your stop losses will obviously be a lot smaller because you've waited for a new zone within the zone to form. And yeah, you might find a lower time frame zone within that H1 zone, which will give you a much smaller stop loss. Then on your cons, we've got number one, easy to miss trades, as some might leave the zone without you. So often a time you'll find that price taps into the zone and then just melts from there, or just boosts to the upside from there without giving us any proper confirmation entry. So this does happen, and hence why an aggressive entry at times is valid. So number two, on the cons, we've got requires you to spend more time on the chart. So an aggressive entry, remember we said that we spend less time on the charts because you set your limit and you just leave it to run. On a confirmation entry, it requires you to actually be more present on the chart. So you obviously got to analyze it a little bit more. You got to identify the momentum in which price approaches and then how it reacts off the zone. So that's very important because from the zone, you need to see some sort of change in character occur in order for your setup to be valid. So yeah, that's basically what you'd look for. I just want to switch back to a chart and go through a couple of examples with you guys. So on an aggressive entry like we've got here, you've identified your higher time frame supply zone, and from there, so we look at Euro USD, and we've got the 1 hour supply zone, right? So from there, you're looking to sell off from there, and your stop loss would have been there. So as soon as price enters, look, this is an aggressive entry. You can see as soon as it hit, it pretty much melted from there. And you could have used your Fibonacci as well. So you could have used your Fib from your previous swing high to your current swing low because you were in a downtrend. And that's the setup that you're looking at. Price entered discounted area, and yeah, sold. So first take profit would have been down here at the, so your first take profit was there, and your next take profit here, and take profit 3 was down there. So pretty much that's all it is to an aggressive entry. When it comes to one like this here, where you've identified your confirmation entry, this would be of a H4. So if we look at it here, we'll see an H4. Not H4, what's it? Might be a 30-minute, yeah. Okay, so it's a 30-minute supply area. So you identified the 30-minute supply area, and then what happened was you waited for price to give us a change in character. So we tapped into supply, which was here. So price dropped off, tapped back into supply. So if you were taking an aggressive entry, you'd enter immediately off that area there, and that would be your stop loss. But a confirmed entry would be when you see the change in character. So if we look at it from here, we can see that this is the last low in the market. So we had a change in character that occurred at that level. Price took out that low, gave us a lower low, gave us the lower high. But by doing so, now form new supply there. And that would have been the confirmed entry into this trade. So you were looking to enter somewhere around there, stop loss again there. That's the confirmed entry, but go down to your lower time frame. See how we get it here. There we are. So confirmed entry, there's your supply zone on the lower time frame. Pull that across. Bang. So your entry was actually at that level there, on a confirmed entry on the lower time frame. So remember, that's your higher time frame zone on top. This would be the entry on your lower time frame, because you identified the supply area here. Just mark this off. Okay, so 5-minute supply was at that level. Notice how if you took the trade off the 1 hour or 30-minute, you were looking at a stop loss that was the size of that. That would have been your stop loss. You've got more than half the size of a stop loss, less than half the size of a stop loss, simply because you had a confirmation entry. So it's a higher risk to reward trade. So this was your 30-minute entry, and your 5-minute entry was here. The much higher risk to reward trade. This was a 1:2. So if you're looking at that and you targeted previous lows there, you were targeting this one is, this one, your 30-minute is a 1:5, and I think your it's a 1:5, and this one's a 1:10. So exactly the same trade with a much better risk to reward setup. You see that? Okay, so yeah, that would be your confirmation entry into the trade, and that was your change in character there. So price took out those lows and showed you intention of continuing to the downside. If we scroll back up here, see. Okay, so on here again, here's another example. If you're looking at this, you would see that we've got a supply zone that forms on the 4-hour at this level. And you obviously, if you were looking at a aggressive entry, you're going to put your sell limit immediately as price enters and your stop loss above the zone. But remember that obviously now means that you've got a much bigger stop loss and a less risk to reward setup. However, if you were looking at it like this. So once price taps into the zone, your confirmation entry would be, if we go to the 30-minute, 5-minute, let's see, or the 15-minute. Okay, so let's look at the 15. Okay, there we are. So immediately you've got a change in character that happens. Yeah, right. So first change in character there. Then you've got a new supply area that forms here. Your next, if you're looking at it from here and you got an entry of here, you're looking at your change in character being there, and from there you had a lower risk to reward, just sitting at somewhere there, and that was your entry thing. Stop loss above that zone. That's how you would have caught that. Yeah, so guys, that's how you identify these setups and your entries. So it's crucial you obviously understand the difference between a risk and confirmation entry, as this will obviously help you on your entries and identifying the correct entries for you guys to obviously be in. Yeah, hope you enjoyed the content. If you do, please drop a like. Don't forget to subscribe, as it helps this channel grow. And yeah, those of you who are interested in purchasing the course, I'll drop the details down below in the description below. And yeah, I'll catch you guys on the next video. Take it easy. Bye.